This is Friday, January 30th, 2026, the last trading day of the month. And silver just crashed from $121 to $95, $26 gone in hours. Gold crashed from $5,600 to $4,150. If you're panicking right now, stop. Take a breath. Because what I'm about to show you doesn't make sense. The numbers don't add up. The story the market is telling you is not the real story. Silver crashed 22% this week, one of the biggest weekly crashes in years. And yet right now, at this very moment, you cannot buy physical silver. The Perth Mint in Australia has suspended sales. The US Mint has suspended sales. The Royal Mint in the UK is out of stock. Dealers in India are defaulting on deliveries. Costco has purchase limits. Let me say that again, the price is crashing. But you cannot buy the product. Does that make sense to you? In any normal market, when price crashes, supply increases. Sellers come out. Product becomes available. But that's not what's happening here. The price is crashing while supply is vanishing. Something is very wrong. A few days ago, I made a video warning you that $107 was a crucial zone for silver. I explained why a crash was coming. I showed you a 30-year historical pattern. Everyone was bullish. Now here we are. Silver crashed exactly as predicted. But here's what I didn't expect. While silver was crashing, the physical market completely broke down. Mints around the world suspended sales. A complete disconnect between paper and physical. And that's what we need to talk about. Most people don't understand how silver works. There are two markets, not one. And they're telling completely different stories right now. The paper market. This is COMEX, where futures contracts, derivatives, and digital silver trade. Hedge funds, banks, and institutions trade billions daily. But here's the key. They're not trading real silver. They're trading paper promises. Contracts that say someone will deliver silver in the future. Most never result in actual delivery. They're just bets. Casino chips. A giant poker game where billions change hands, but players never actually touch any silver. The physical market. This is where actual silver trades. Real metal. Coins you can hold. Bars you can stack. Stuff that exists in the real world. These two markets are supposed to be connected. The paper price should reflect what physical silver is actually worth. But right now they're completely disconnected. The link is broken. The paper market says silver is $95. The physical market says you can't have any at any price. One of these is lying to you. Which one do you believe? The computer screen or the empty shelves? Let me show you the evidence. Perth Mint, Australia. One of the largest and most respected mints in the world. On Thursday morning, before the crash happened, when silver was still at $107, they sent a notice to wholesale distributors. I've seen this notice. Due to increasing worldwide demand for silver bullion products, we have a large backlog of orders for the 2026 Kangaroo 10Z silver bullion coin. We have decided to pause taking wholesale orders from today until February 23rd to clear back orders. Read that again. Increasing worldwide demand, not decreasing. Large backlog of orders, not surplus inventory. Pause taking orders, not discount sale. Until February 23rd, almost a full month. This was sent when silver was at $179 before the crash, when everything looked fine. They're also implementing monthly allocations. That's rationing language. That's what you do when you don't have enough product. Australia is one of the largest silver-producing nations, and their own mint can't get enough silver. Let that sink in. Then the crash happened. Silver dropped to $95, a $26 discount. If the Perth Mint was already at breaking point at $117, what happened when silver crashed to $95? Every smart investor saw a 22% discount on an asset mints can't keep in stock. They bought everything they could find. The crash didn't reduce demand. It created a tsunami of new demand. United States Mint suspended all sales of silver numismatic products. When you call customer service, they say they're updating prices. But here's what really happened. Silver prices moved so fast, the mint couldn't keep up. They were selling silver eagles at $91 when spot was above $90, losing money on every sale. So they stopped. When products came back online, prices jumped from $91 to $169, an 86% price increase overnight. The 2026 American Silver Eagle that was supposed to release in January, delayed to late February. Subscriptions already sold out. India, one of the largest silver markets in the world. Right now, dealers aren't just running low, they're defaulting on deliveries, taking orders, accepting payment, then failing to deliver. People are paying for silver and not receiving it. Amazon India sellers are defaulting, with screenshots of cancelled orders circulating online. Royal Mint, UK, one of the oldest mints in the world. They've been producing coins for over 1,000 years, out of stock on silver bars, even 1 kilogram bars, the most common format, gone. When major sovereign mints across multiple continents are all experiencing the same issues at the same time, that's not coincidence. That's a systemic crisis. Costco. Yes, Costco. The place where you buy toilet paper and rotisserie chicken. They sell silver bullion. They've implemented purchase limits. Costco is rationing silver. A retail store known for selling in bulk is limiting how much you can buy. Why? Because demand is overwhelming supply. Are you tracking this? The price crashes. The mints shut down. That contradiction is the signal. Now let me show you what's happening in China. This should genuinely scare you. I have Shanghai Futures Exchange data from today, January 30th. The SHF silver vaults currently hold 455 metric tons of silver. That's 14.6 million ounces. In one single day, 26.94 metric tons were removed from the vaults. Almost 27 tons in 24 hours. Let me put that in perspective. 27 tons is approximately 870,000 ounces drained in one day. At this drain rate, the Shanghai vaults could be completely empty in less than 3 weeks. Annual global silver demand is over 1 billion ounces. The Shanghai vaults hold just 14.6 million ounces. That's barely 1% of annual demand. That's nothing. And nobody in mainstream media is talking about this. Here's what makes this terrifying. China has already restricted silver exports. They've classified silver as a strategic national security asset. They're treating it like rare earth minerals, like materials for weapons and AI infrastructure. Think about what China is doing. Restricting exports. No silver leaves. China draining their own exchange vaults, taking physical delivery, moving metal from public warehouses to private storage. What does that tell you? China knows something we don't. They're hoarding physical silver while the paper market crashes. While Americans sell paper contracts, China takes physical delivery of every ounce they can get. One side is selling paper, the other side is hoarding metal. Which side do you think knows what silver is really worth? Now let me tell you who is doing the selling. This is perhaps the most important part of this entire video. Pay very close attention. Nearly all the selling this week occurred during U.S. market hours. Not Asian hours when Shanghai trades, not European hours when London is active. U.S. market hours. When New York opens, silver dumps. When New York closes, silver stabilizes. Sometimes it even rises during Asian hours. Then New York opens and the selling resumes. This pattern repeated every single day this week. It's not random, it's coordinated. American banks are selling digital derivatives and paper promises, something they don't have. Creating digital silver out of nothing. Pressing buttons, moving numbers on screens. Meanwhile, people in Asia and the Middle East are loading physical bars onto trucks, taking delivery, draining vaults, removing real metal from the system. One side is playing a video game. The other side is taking home the prize. The paper price goes down. The physical metal disappears. This has been the pattern for decades. The West sells paper. The East buys physical. But right now, it's happening more aggressively than ever. The disconnect has never been this extreme. This is not a free market. This is a rigged game. And if you don't understand how the game works, you will be the victim of it. You will sell your physical metal at the bottom because the paper price scared you and someone in Shanghai or Dubai will happily take it off your hands. Do not be the victim. Be the one who understands. Let me show you lease rates, what it costs to borrow physical silver. Normally near zero, around 0.3–0.5%. Right now, silver lease rates have exploded. Some reports show 8%. Others show rates as high as 39%. 39% to borrow silver. That's a panic signal. That means physical silver is so scarce that holders are demanding massive premiums just to temporarily lend it out. When lease rates spike like this, the physical market is broken. What we're witnessing is a complete breakdown of the paper-silver pricing mechanism. For decades, the price of silver has been set by paper trading. Banks trade hundreds of millions of ounces of paper silver every day. The actual physical market is tiny by comparison. This allowed price to be manipulated, suppressed, controlled. But now physical demand has overwhelmed the system. Mints can't keep up. Vaults are draining. Dealers are defaulting. Lease rates are exploding. The paper market says $95. The physical market says there's no silver available at any price. Eventually, one of these has to give. Either the paper price rises to reflect physical reality, or the physical market completely breaks down. I believe we're approaching that breaking point. Now let me tell you what this means for you, because understanding the situation is useless if you don't know how to act on it. And I'm going to be very direct here. No sugarcoating. If you're holding physical silver, do not panic. I repeat, do not panic. Do not let the paper price scare you into selling your metal. Look at the facts. Mints suspending sales, dealers defaulting, China hoarding, vaults draining, lease rates exploding. You're holding the one thing the entire world is scrambling to get. The paper price is noise. It's manipulation. Your physical metal is worth what someone will actually pay for it in the real world. Right now, that's way more than $95. Hold your metal. Do not be fooled. If you're holding paper silver, ETFs, futures contracts, ask yourself one question. If everyone demanded physical delivery tomorrow, could your counterparty actually deliver? The answer is probably no. There's not enough metal. You don't own silver. You own a promise. And promises break. If you're looking to buy, good luck. Physical premiums are exploding. Japan is paying 60% over spot. Dubai is paying 40% over spot. The paper price says $95. The real world price is $120, $130 higher. If you can find physical silver at reasonable premiums, consider yourself lucky. That inventory won't last. And here's the paradox that will blow your mind. The lower the paper price crashes, the faster physical silver disappears. Lower prices create more demand. More demand drains supply faster. The crash is making the shortage worse, not better. Are you positioned on the right side of this transfer? Or are you still holding paper while physical disappears? This didn't start today. Silver has been in a deficit for 5 consecutive years. Every year since 2021, demand has exceeded supply. Annual global mine production, 835 million ounces. Annual consumption, over 1 billion ounces. That's industrial demand for solar panels, electronics, EVs, medical devices. Investment demand, jewelry. Total demand exceeds mine supply by hundreds of millions of ounces every year. The cumulative deficit over these 5 years is over 800 million ounces. Where does that extra silver come from? Above ground stockpiles, vaults, reserves, inventory built up over previous decades. Think of it like a bathtub. Mine supply is water coming in. Demand is water draining out. For 5 years, more has drained out than come in. The bathtub is emptying. Those stockpiles are now dangerously low. Shanghai vaults at critically low levels. COMEX registered silver declining for years. London vaults seeing significant drawdowns. There's no emergency reserve left. The buffer is depleted. There is no more slack in the system. And now, with mints suspending sales and dealers defaulting, we're seeing the consequences of years of deficits finally catching up to reality. This is not a short-term issue that will resolve itself next week. This is a structural problem that's been building for 5 years. And it's accelerating. I believe we're entering a new phase where paper and physical completely diverge. The paper price may continue to be volatile, manipulated, controlled. But physical silver will become increasingly scarce. Premiums will rise. Availability will decline. Eventually, you simply won't be able to buy physical silver at the paper price. This is already happening. Physical premiums have exploded. The paper price says $95, but actual metal costs $120, $130 or more. This disconnect will only widen. In 1979-1980, during the last great silver squeeze, similar dynamics played out. Paper and physical disconnected. Dealers ran out. Premiums exploded. Eventually, the paper price had to catch up. It had no choice. When there's no physical metal to deliver against paper contracts, the paper price becomes meaningless. Silver went from $6 to $50 in months, an 800% increase. I'm not saying that exact scenario will repeat, but the fundamental dynamic is the same. When physical supply can't meet physical demand, price must eventually adjust upward. Paper manipulation can delay it, but it can't prevent it forever. At some point, physical reality wins. It always does. Based on what I'm seeing, mints shutting down, vaults draining, lease rates exploding, I believe we're getting very close to that moment. Let me leave you with this. The paper price of silver crashed 22% this week. During that same week, Perth Mint suspended sales. U.S. Mint suspended sales. Royal Mint out of stock. Indian dealers defaulted. China drained 27 tons in a single day. Lease rates hit 39%. The price went down. The physical metal disappeared. One of these things is a lie. And it's not the empty vaults. This is what manipulation looks like. This is what a disconnect between paper and physical looks like. This is what happens when a system built on paper promises confronts physical reality. They crash the price. The whole world is running out. And you get to decide which side of that equation you want to be on. Now here's what I want you to do. 3 things. Subscribe if you haven't already. The next episode connects this silver breakdown to what we showed you in previous episodes. The treasury market breaking, the billionaire exodus, fiscal dominance forming. The pattern is identical across all hard assets. You want to see that connection before the market does. Hit subscribe. Turn on notifications. Share this with one person. Someone who's holding paper silver ETFs. Someone whose financial advisor told them the crash means sell. Someone who needs to see what China is actually doing while America manipulates paper prices. Comment below. Do you think paper catches up to physical, or does physical break entirely? Are you holding physical or paper? Which signal do you trust more, the paper price or the vault drains? The price is crashing. But you can't buy the product. That's not a market. That's a magic trick. And now you know how the trick works. The pattern doesn't care about narratives. It doesn't wait for consensus. It doesn't need your permission. It just executes. Like clockwork. Like mathematics. Like gravity. Flows don't lie. Welcome to Geopolitics of Money.